Adda 24/7. My name is Niharika Balia and I'm with you for the area of accounting and financial management for bankers. So let's start with the particular topic today. Today we are going to cover up the topic from the point of view of the financial statements of an organization. This is how the financial statements of an organization looks like. So today we'll be studying what is the format for the financial statements of a particular organization. So let's understand this particular topic, everyone. For example, you are given a particular organization. They prepare their trading as well as the profit and loss account, and then they prepare the balance sheet. These three things together makes up the financial statements of an organization. What do they do exactly? In this case, what they do is number one, that is, first of all, they find out the profits or losses during production, and then to sell that particular thing, they would do the selling, administration, and other work. That is what they define as this part. So, if we talk about this area, this is nothing but there are two sides. First is called debit side, the second is called the credit side. Here, what they call it, it's a nominal account which helps to find out whatever profit or loss the organization has earned during the year. First of all, they will record whatever their production portion is. When we talk about the production, it's about writing the opening inventory first, the opening inventory here, and if there is a closing inventory, it would be written here. The closing inventory, that means the stock that you have in terms of the stock which is not sold, that would be recorded as closing inventory. Then whatever you are purchasing during the year, that is purchases. So for example, if I had 10 units worth rupees 10,000, then I bought 20 units worth rupees 20,000. From that, I still have 5,000 left. So that those 5,000 which are left would be written on the credit side. And once we are trying to prepare something, the next point that comes is we will incur expenses on production. First is carriage inwards, right? That means the carriage inwards means whatever we are using for the organization, we'll purchase it now. We'll purchase it from outside. So whatever the purchase amount is, we'll record it here. Then any money which is basically returned outwards, whatever the goods which are purchased, and now we are returning it back. It is return outwards. Then, okay, this is not the format. So in this case, we will write it in this way, and then we will find out our total profit or loss account. And then what they do is they will find out the sales is written on the credit side, and then they find out the gross profit or the gross loss. To explain it in a proper way, they prepare a trading account. Under trading account, what do we have? This side is the debit side, this side is the credit side. This is the expense side, and this is the income side. It is not written that way, it's just written particular an amount. But yes, when we record it in this way. How do we record it? All the expenses, opening stock, purchases, all the direct expenses. The expenses which are required during production would be here. Then by sales and by closing stock. From purchases, we would reduce the purchase return. From sales, we'll reduce the sales return, as these are not something that we have got as purchases or something that we have got as sales. So technically, it will not record any of these. So basically, trading account would record whether we are making gross profit in terms of production or gross loss. But is this the only thing that it does? No, this is not the only thing. The next point it does is number 2. This area was only the direct one. Okay. The trading account was for direct expenses and the income the organization has earned. That means it records the gross profit or gross loss. Then what they do is whatever the profit they would have earned, they take it to the next level. From the profit we have earned, we will record all the indirect expenses here. Anything which was related to production is noted in the trading account. Anything which records to the area of selling it, making the administrative work, and XYZ working together with it, that is something that would be recorded in the P&L or profit and loss account. The second portion is called the profit and loss account, where we record all these things, right? So this is how we would record insurance, transport, rent, carriage outward, salary, advertisement, depreciation, XYZ. This would be a part of this area. While indirect incomes would include interest on deposits, the amount that we are receiving other than our business income. For example, we receive commission, we receive money from a source which was earlier supposed to be bad debt. For example, there was a certain person who turned insolvent and failed to pay us the entire amount. So now we have got a recovery. That means he said he can now pay us the amount and he's ready to pay us. So when he's ready to pay us, we'll record it that way, right? So what next are we going to talk about? The next point that is going to come is the balance sheet. This is a statement, while the first thing that we did was an account. When we talk about the statement, that means what do we record in this area? First of all, the balance sheet is a statement which records, it's a T-shape account. It's a T-shape statement wise. It's not debit or credit. It says one side is called the asset side and this side is called the liability side. How do they specify? The assets would include all the current as well as the non-current assets. Current assets means any asset which is used for more than 1 year, and non-current means any asset which is used for which is used for more than 1 year is current. Non-current, and anything which is used for more than 1 year is non-current. So if I receive the money within the year from you, then you are my current asset. Otherwise, you're a non-current asset for me. So that's the total assets. And when we talk about the total liabilities, it refers to the liabilities that we are incurring in the organization. That means sometimes our money is not enough to raise the capital. Sometimes we need money from outsiders. So we need current as well as non-current liabilities. So when we talk about the current and non-current liabilities, it would include everything that relates to the area of total liabilities. If we are supposed to pay to anybody if we are supposed to pay to anybody within a particular year, it is called current liability. If we are supposed to pay to someone and we are supposed to pay after an year, for example, our long-term loans, it's a non-current liability. Now, but the point is, if we are taking money from outsiders, obviously we are supposed to pay from our pockets as well. That is the share capital. That means the money which the owner of the organization is putting into this. Plus, if any money is saved by the proprietor or the organization for its future use, they call it the retained earnings. So this is what makes up the financial statements of the organization: the trading account, and then we record the profit and loss account, and then we record the balance sheet. Right? That's the balance sheet. So this is 1 and this is 2. Okay, so let's start with the class today, everyone. With the further conceptual knowledge, let's look at it. The question says, if a customer files a legal suit on business, it is considered in the books as legal expense, liability, contingent asset, or a contingent liability. If a person has sued and they have filed a legal suit for that, how do we record it? If we are supposed to pay for a legal suit, then how will we record it? We are supposed to pay in case of a legal suit, then we never know. We might receive, or we might have to pay, or we might not have to pay, because the customer is putting up a case on us now. So if the customer is putting up a case on us, it is not sure that we have to pay or we don't have to pay. In such a situation of uncertainty, in case of uncertainty, we call it a contingent liability. Right? So let's move on and talk about the next one. Dash represents the potential obligation that could be created depending on the outcome of the event. That means when we talk about this, there's a potential obligation. I'm not paying right now, but I might have to pay in the upcoming future. So what will we call it? In this case would be the contingent liability, right? The liabilities which we are not sure we might have to pay, but we can pay in the upcoming future. That means it's a burden on our head. If it's a burden, then it's a contingent liability. Anything which has uncertainty would be recorded there. Among the following, next is which of the following is an event? Sale of goods for rupees 5,000, closing stock worth rupees 4,000, purchases of goods worth rupees 8,000, or rent paid 2,000. There is a difference between a transaction and an event. Do you know what's the difference between the two? In terms of a transaction, what we do is in terms of transaction, the transaction is something which is something just happened, and its impact or its effect is called an event. So in this case, sale is just a transaction, right? Then purchase is another transaction. Nothing else happens in this area. What next happens there, right? When we talk about the closing stock is basically an effect. We purchased goods and among them we sold a few and the rest was still with us. When we have such kind of scenarios with us, that is where we record it as the closing stock. The unsold items, the closing stock is captured in the financial statements as the current assets. An event can be internal or external. Next question, everyone. This is the manager of the company receives a commission of 10% after charging such commission. The net profit of the entity was 5,50,000. The commission will be. They are saying the manager of the company receives a commission after charging. That means this 5,50,000 includes the commission. So if it includes the commission, the best way is whenever the question says after charging. So the best way to write it, take the profit multiplied by rate upon 100 plus rate. So that's the way we can record it. That is 5,50,000 into rate is 10 upon 110. So in this case, the value will come out to be 50,000. That's the answer. Such kind of questions can be asked. It can be either after or it can also be before. That means it can be 5,50,000 multiplied by 10%. When it says before charging such commission, then 10 divided by 100. Or after charging 10 divided by 100 plus 10%. That is rate upon 100 plus rate. Now the next question. The cash and bank is 20,000. Debtors are 2 lakh. Stock is 2,80,000. Current liabilities is given that there is a creditor and there is a bills payable. Then what is the value of the working capital, everyone? what is the value that we can record it as the working capital? Working capital of an organization can be defined as WC is equal to CA minus CL. So how do we record it? It would be add up all the current assets and add up all the current liabilities. The current assets includes 20,000 plus 2 lakh plus 2,80,000. In terms of liabilities, add up 1 lakh plus 50,000. So it is basically this current assets are a total of 5 lakh, while the current liabilities are of total 1,50,000. So what would be the working capital? Just deduct 5 lakh and 1,50,000, giving us a value of 3,50,000. That is our working capital. The formula for working capital can be defined as CA minus CL. This is the formula for the current assets minus current liabilities. So this is the end of the session. If you're preparing for this area, in the upcoming class, I'll discuss this particular financial statements in detail. So if you're looking forward to it, then kindly join the next class as well, where we will be talking about this in detail. So if you're preparing for the JAIIB examination and the CAIIB examination, so you can look forward to our website, that is www.adda247.com. As soon as you go to our area, you can click on the area of all courses, where you will find the JAIIB and CAIIB area. All you need to click is either you click up the JAIIB CAIIB Ka Mahapack. In this Mahapack, you not only double validity is going on. This means if you take up the 6 months, if you take up the 12 months validity, it would be available for 2 years to you. But what is this Mahapack? Under Mahapack, you not only get the JAIIB plus you also get the CAIIB, plus you not only get the syllabus classes, but you also get the mock test series. You get each and every batch, not only the English medium, but also the bilingual batch, test series, MCQ batches that are coming up, numerical batches, case study batches, power pack revision batches just before the examination. Everything is open for you. All you need to do is click on this area, take up our batches and review it for further revision. So this is what you can do. You can take up this particular pack, which would ensure that you get live classes, mock test series, video solutions, all revision batches, all recorded batches, all the ebooks, numerical batches, case study batches. Everything is available for you under this. So if you're preparing for this examination, so kindly hurry up and check it out on our website or in our app. All you need to do is click on the area of buy now. And as soon as you click on the area of buy now, you can use the code buy541 and you will get it at 81% discount and 2 years validity. That means 12 plus 12 months validity, which is a win-win situation for you. So if you're preparing for this examination, so kindly check it out on our website or in our app and take up the course as early as possible. Thank you everyone. We'll be meeting in the next class soon.